Hi guys, this is Lee with the Market Sense for the week of November 10th, 2020. The charts in this presentation are provided to us by Gettess and come from their Trade Navigator software. And the last time we talked was election night Tuesday, so has anything happened since then? Maybe a few things. So bonds had an actual positive reaction on the election news, or actually right on the election, even though they didn't have an answer. And now they've begun to weaken this week, largely due to the news about a new vaccine. They think the vaccine will make the economy better, therefore interest rates don't have to stay so low. Not so fast, my friends. Here's what we've got. We've got them breaking down at the lowest thing here is, let's see, that's 170.10, I believe, is the projected low, 170.10. If they close below that, and more specifically, if they can get down here to near 168, the lower Keltner channel, and close right on the low, this would be what I consider to be a perfect exhaustion bar. This would be something that I would really look hard at buying next week if they can get that week. Now they may not get that week. They could still turn around. I think the celebration of the economy getting better due to the vaccine is more than a little premature. And I think the Fed will continue to hold interest rates down, and I think it's likely this will turn back up and not continue to break down. At some point, this big, massive sideways that has existed most of the year, at some point they're going to break down out of this and interest rates will go up. I just don't think they're ready to do that yet, despite the fact that they're trying to do so at this point. So I don't know if this will set up an exhaustion bar, but that's really what I'd like to see. I'd like to see them get even weaker, close right on the low, and then see if we can't find a reason to buy them early next week. That would be a really good setup, I believe. Now, stocks, they've also reacted both to the election and then to the vaccine news, but theirs was a little different. They rallied massively, basically Sunday night. Once we got the Sunday night into Monday morning, when we got the news of the 90% accuracy in the vaccine. And then after making substantial highs, they started to realize that that actually wasn't good for some stocks. You know, stocks like Zoom and Amazon and those that have been doing well while everybody has to stay home, maybe they won't do so well. So they gave up some of that. And that's an interesting thing to go this far above everything to new all-time highs and then start to give it up. Yeah, it's a little concerning. The chances of them continuing down from here have to be a concern. You have to keep your eyes open. What we're really looking at most importantly is this area right in here, which is 34.88. If they can continue to hold above that, they'll not only look okay, they'll actually look pretty strong. They'll look like they could potentially turn right back up to new highs from there. If they break down below 3,400, and I think this is 33.97, the middle moving average, that's still okay. There's not any damage done. Heck, they could go all the way down here to 32.90 and that wouldn't be damage done really. But that wouldn't look as good as holding up here. And basically that's what we're talking about, degrees. If they can hold just below 3,400, that's better than just below 3,300. And 34.88 is even better. But that actually would be quite positive that they could hold that. Um, that probably would send them to new highs again next week. And so that's what we'd like to see, but that's the first area to monitor. Can they hold that? And if not, well, then do they go all the way below 3,400? Now, if we look at the QQQs representing the Nasdaq, little different situation, and that's probably because more of the stocks that are impacted by not staying at home anymore are the tech stocks in the Nasdaq. What we have here is they gapped up Monday morning and then closed the gap and gave it up. Now, that is not uncommon for that to be how moves terminate. So obviously a big warning sign there. Fighting that is the fact that markets tend to rally out of elections, regardless of who wins. They tend to have at least a couple week kind of rally. So that's those two things are kind of fighting each other. The big news are big news. They did not hold this upper support, which would have been quite good. That's what is that? 290, 290.72, I think. They clearly have not held that, so we can't assume that they're going to trend up strongly. However, this is 281.75 is that middle moving average, and they appear to be holding that at this point. If they continue to do that, then you still have to assume that the trend is up. Not as strong as if it would have held higher, but still in positive mode at that point. And of course, even breaking down to 271.62 isn't the end of the world. They could still be okay from there. They're still making higher highs, higher lows. But again, the gap is a little worrying. The seasonality of actually the election days is positive. If they can hold this support, then, I think more prices to the upside are probably going to follow. So that's what we've got for you today. I hope you can find something profitable